Wall Street closes lower on Friday as U.S. President Donald Trump threatens further tariffs on trading partners. Asian markets open lower. The gift Nifty is also suggesting a weak start for the Indian markets. Crude prices dip for the third straight week, with Brent trading around $75 a barrel. Coal prices rise for the sixth straight week on increased safe haven demand as trade tensions escalate. Following the customary post-budget meet with the RBI Governor, Finance Minister Nirmala Sitharaman says that the new income tax bill will be tabled in the Parliament this week. Speaking on the rupee, the Governor says that the RBI will let market forces determine the level of rupee and that the RBI will only manage excess volatility. The BJP comes back to power in Delhi after 27 years, winning over 45 seats out of 70. The Aam Aadmi Party loses after 10-year reign, winning only 23 seats. AAP leader Arvind Kejriwal as well as Manish Sisodia also lose their incumbent seats. Manipur Chief Minister Biren Seng resigns nearly after 2 years after ethnic violence erupted in the state. This comes even as the Congress was planning to move a no-confidence motion against the government led by Seng. Hello, good morning. You've tuned into CNBC TV18. You're watching Power Breakfast with me, Vinny Motiwala. And today, the markets, how they've opened up this Monday, Asian markets, a very mixed opening that we're seeing coming in. And this is why, because Trump had given some indications on Friday that maybe he would be imposing some tariffs on some other countries as well. So the trade tariff, the tariff wars, that seems to be continuing. Asian markets as of now, Taiwan index down 0.8%, Hang Seng is up 1%. So we're seeing a mixed opening coming in across the board for the Asian markets. ASX 200 also is seeing a bit of a negative start this morning, down 0.2%. Nikkei is holding on to just the minor gain of around 30 points in trade as of now. Nifty implied open, let's pull that up because that's indicating a bit of a decline for the Indian markets as well. 60 points down is what the Nifty implied is as of now. So expecting a bit of a muted to a red start coming in even for the Indian markets. So not much of an excitement that we're expecting today. Bit of a red on the screen is what we're watching out for. Now, staying with the Asian markets, let's also listen into Andy Shi, who is an independent economist, and he's giving his views on the impact of tariffs imposed by the US and what does it impact in terms of China or overall the trade across the globe.
The trade war exposed the risks that China had. So the government deflated the property bubble and the shadow banking system. And pivoted to technology. It appears that the economy is in a much better position now. It's not sitting on a big bubble, and the economy has become a lot more competitive, and technologically it's becoming more independent. The exposure to the United States has come down from 24% to 13%. So it's less vulnerable to tariff hike. So I think China is in much better position now. I do believe that this emboldens China to play hardball with Trump.
Okay, and also let's move on now to the U.S. markets. Wall Street ended Friday's trading session sharply lower as inflation as well as tariff fears were some of the worries for traders. Now, Dow lost around 444 points while the S&P 500 ended nearly 1% lower in trade. The tech-heavy Nasdaq that shed nearly 270 points at close, and Friday's losses left major averages in the negative territory for the week. January jobs report showed that unemployment rate fell to 4% from 4.1%, and the average hourly earnings last month were higher than that was expected. In fact, we have CNBC's Rick Santelli, who's joining in with us to give us a roundup.
It's the big jobs report. January data, 143,000. 143,000 is our gain in non-farm payrolls, and a nice juicy revision to last month from 256 to 307,000. That would make last month one of the best months going back to March of 24. given no big revisions to the data I'm still holding in my hand. Now, if we look at the two-month net revision was minus 8,000, minus 8,000. Average hourly earnings on a month-over-month basis, well, we were expecting up 0.3, and boy, I told you to look at this one, up 0.5, up 0.5%. Equals January of 24. You're going way, way, way back to March of 22 to find a bigger number in the form of up 0.6. We not only didn't stay at 3.9 on year-over-year earnings, we moved up to 4.1, which would equal where we were in March. To find a bigger number, go to February of last year. Now, if you look at the work week, 34.1. This is very exciting because that smaller work week, of course, has other ramifications for juicing some of the other numbers. We've been at 34.3 forever. You have to go in the Wayback Machine to find 34.1. I don't even have it going back 2 or 3 years, so that's a big move. Finally, let's look at U3. U3, the unemployment rate, 4%. 4%. It moved down. It didn't move up. 4%. Now, 4% equals where we were in May. To find a lower one, you're looking at 3.9 in April of 24.
On that note, let's also listen into some reactions coming in on the jobs data from Anil Kashkari, president of Monopolist Federal Reserve.
The most important one is 4.0% unemployment rate. This is still a good labor market. It's not as hot as it was a year or two ago. And I validate this data by talking to businesses all around the region and around the country. And overall, the feedback that I'm getting is the economy is strong, businesses are optimistic. It's a cooler labor market than a year ago, but they're still having to work to find the workers that they need. And so I think the economy's in a good place. We want to keep it there while getting inflation all the way back down to our target.
Okay, that's all the global market actions that we have for you all that came in over the weekend. But how is that going to be impacting the Indian market? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for, as well as give you the cues in the world of F&O. We have Abhishek as well as Sudarshan joining with us. Good afternoon, good morning, I beg your pardon. Good morning, Abhishek as well as Sudarshan. But before I come to you all, I'm going to take you all through which are the important cues in the market that we're watching out for today. Last week when we saw that, market posted a minor gain coming in for the week, ended higher for the second straight week, but pharma, metals, that was the top gainers in terms of top sectoral movers, both of them gaining almost 3% each for the week. Now we had Nifty FMCG that was among the top drags coming in. We had big FMCG names that reported their numbers, and we saw some bit of a weakness also coming in for the FMCG stock. So yes, FMCG among the top sectoral losers. This is for the week. Now specifically on Friday, what happened? Markets, volatile day that came in for the markets. We had the RBI rate decision that came in, and despite the rate cut coming in of 25 basis point for the repo rate, we saw that the market closed in the red on Friday. Mid-caps, that was the outperformer and the green spot that came in on the market. So Nifty mid-cap managed to hold on to gains. 108-point gain is what the Nifty mid-cap saw. FIIs, they continued to sell for the third straight day on Friday. So FIIs sold around 470 crore rupees. DIIs continued to be net buyers in the market. What are we watching out for? Now, obviously, Trump announcements around trade tariff wars, that's the concern that is there, and uncertainty that's there. Keep an eye on that. We have domestic data this week, so important to watch out for IIP, CPI, WPI data, as well as FII flows. Where are they going to be heading? Is it going to be seeing continued selling? What is the factor there? As well as Indian rupee, because last week we did hit those record lows. Where is that headed? It's going to be important to watch out for the rupee movement. Lastly, Nifty implied open as of now is indicating a bit of a sluggish start for the Indian markets, down 56-point in trade. But that's how the market setup is looking like as of now. But let's go across to Abhishek, who's here to tell us which are the important stocks to watch out for in trade this morning. Good morning, Abhishek.
Good morning, Vinny. So life insurance sector will be in focus given the fact that January business data has come out, and the private life insurance data does show that SBI Life is on the weaker side. ICICI Pru also on the weaker side. January premium shows that it is down 1% YOY, and in 10 months it's up 12% YOY. Both total APE, that is annualized premium equivalent, and retail APE, they have grown by 19% YOY and 20% YOY respectively. respectively. For LIC, the Jan premium is down 14% YOY. The 10-month FI25 premium is up about just 5% YOY. The total APE is down 27% YOY and the retail APE is down 7% YOY. Also, LIC did report its Q3 FI25 numbers. The new business premium was ahead of our poll. However, the total APE and the retail APE were way below our poll. Oil India, that is another weak results that have come in. Revenue is down 0.1% YOY and profits are down more than 33% YOY. Fortis Healthcare, the revenue is up nearly 15% YOY while the profits have grown by 90% YOY. They have one of the exceptional gain of about 24 crore. Nonetheless, strong numbers over there. Honeywell Automation revenue is up just 1.8% YOY. Profits are up less than 3.5% YOY. The margins have also contracted by 200 basis points. In terms of other news, L&T Finance will acquire the gold loan business of Paul Merchant Finance for a consideration of 537 crore in cash. Back to you.
Okay, Abhishek, thank you so much for that. Whole host of stocks to watch out for in today's trading session. But finally, we have Sudarshan also, who's waiting by to tell us what's going to be happening in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So on Friday, we saw RBI cutting policy rate for the first time in last 5 years, but it failed to boost the sentiment in the market, and we saw the sensex and nifty closing with minor cuts. Even today, GIFT Nifty is indicating a start with cuts of around 50 to 60 points. On the flows front, on Friday, we saw FIs selling shares worth rupees 470 crore in the cash market, while it was largely offset by DIs, which bought shares of more than rupees 450 crore. Even in the index futures, FIs sold shares of rupees 1100 crore. Also, they have reduced long positions by 215 contracts and added short positions of more than 6,100 contracts. But in the index option stock futures, FIs have bought, in the index option, they have bought shares worth rupees 7,800 crore, and in stock futures, they have bought nearly 500 crore. With this, FIs long exposure now is at 16%, and on the client side, long exposure remains at 72%. On the option side, 23,600 call and 23,800 call have seen healthy additions, and on the put side, 23,000 put has seen addition of more than 11 lakh shares, and 23,200 put has seen addition of nearly 26 lakh shares. With these important levels for Nifty, support is now seen somewhere around 23,200, that is the last week's intraday low, and resistance is now seen around 23,750. In stocks in focus, Manappuram Finance has entered F&O ban, and some of the stocks that will be in focus, first one is Federal Bank, second REC and PFC, and these stocks will be in focus on the back of RBI's announcements on Friday.
Absolutely, Sudarshan. Thank you so much for that. So keep an eye out on Federal Bank, REC and PFC also in today's trading session. But on that note, we're going to slip into a very short break, and after the break, we'll get your details as Finance Minister Nirmala Sitharaman and RBI Governor Sanjay Malhotra address the media after the customary post-budget. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV18. Now let's move on. The Finance Minister Nirmala Sitharaman and the RBI Governor Sanjay Malhotra addressed the Central Board of Directors of the RBI in a customary post-budget meeting on Saturday. The Finance Minister said that the new income tax bill will be tabled in the Parliament this week. And speaking on the rupee depreciation, the Governor said that the RBI will let market forces determine the level of the rupee. Listen in.
Yesterday, the Cabinet has cleared the new income tax proposal. I hope to have it introduced in the Lok Sabha in the coming week. Post that, it will go to a committee. And as you know the process is, the committee gives its recommendation, it comes back, and then the government, through the Cabinet, takes a call whether these amendments are to be taken in or some of them or more need to be added. It's only after that it again goes to the Parliament. So once the Parliament after that passes it is when we'll decide on when best to roll it out. The orders for fast-moving consumer goods for the period April to June are already getting booked, and industry is clearly seeing the signs of a possible recovery of consumption, and as a result, many of them are looking at reviewing their capacity utilization itself.
most of the depreciation is driven by the uncertainties which have come about because of the global and especially the Trump related tariff announcements, and hopefully that should settle down, and that should help us in the downward movement of inflation. For the rupee price depreciation is something which the market forces, as I mentioned, determine. We have a number of instruments at our hands to control and manage liquidity.
Okay, and let's move on to some updates on the election front in Delhi. And the BJP storms are back to power in Delhi after 27 years, sweeping the election with over a two-third majority following a hyper-localized campaign. The Aam Aadmi Party, battling 10 years of anti-incumbency, saw its leader Arvind Kejriwal lose a New Delhi seat to BJP's Parvesh Verma. The AAP's party's Manish Sisodia also loses his seat, but outgoing Chief Minister Atishi won her battle in the Kalkaji constituency. And let's move on. Manipur Chief Minister N. Biren Singh resigned on Sunday, nearly 2 years after ethnic violence erupted in the state. The resignation comes a day after he asserted his government had been making all efforts to restore peace in the strife-torn state, reportedly citing the ethnic violence that broke out in May 2023. Around 12 MLAs have been strongly pushing for a change in leadership. According to the government figures, over 200 people have been killed in the violence so far and 60,000 have been displaced. Okay, on that note, we're going to submit a very short break. Don't go anywhere. We'll tell you what's happening in the world of commodities after this break. Welcome back to Power Breakfast on CNBC TV18. Now let's go across to Manisha, who's waiting by to tell us what's happened in the world of commodities overnight. Manisha?
Morning, Minnie. Thank you for that. Well, I'll start with the gold prices, which are trading near all-time highs of 28.85 that we saw on Friday itself. Well, easing policies from global central banks and the expectations that China would follow with retaliatory tariffs today also has led to some safe haven buying coming in for the gold prices. But the major gains clearly continue in case of metals as a sector. So steel, aluminum, zinc and copper clearly continues to be the top performing metal here. We are looking at 4-month highs in case of copper. We've seen 7% of gains in copper prices in the previous week, and this has been the best weekly gain since the month of September. There have been important statements coming out of Chile, which is cautioned on tightening supplies and rising demand for copper from energy transition and electrical networks, and that really seems to be supporting those metals there.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, Bazaar Morning Call.